Joining us now with this call for the markets on the first trading day of September is Tom Lee, Managing Partner and Head of Research at Fundstrat Global Advisors, as well as a CNBC contributor. And all along, Tom, when you've made these prescient calls, some of them even short term, it had to do with positive surprises on inflation. And is that going to be enough from here on out to keep the market headed higher, or have we shifted to growth worries now?
I think there's probably more growth worries in people's minds these days. So the jobs reports and claims seem to have more market reaction. I think that's going to be the case in September as well. I mean, we have the Fed meeting at sort of in the middle of the month, but this week is the jobs report. I'm sure there's going to be a lot of focus on that.
Right. So what kept you positive was that the numbers were always, for the market, they were better than people were thinking. Is that going to continue to be the case? But it's no longer inflation, it's now growth. So growth will continue pretty good, jobs will continue pretty good. You're not worried about another growth scare like we had 6 weeks ago?
Yes, I think that the growth scare is what everyone's worried about, because the July jobs report was kind of a shock to markets, and that's part of how we had that Tokyo Black Monday. I think this jobs report for August is going to show a nice rebound for growth in jobs. Hopefully it's not too strong, because of course, as you know, if it's too strong, people are going to worry the Fed might backpedal on a September cut.
So where does that leave you in terms of what is seasonally, Andrew just alluded to it, September's not great, and we know, I mean, we always make lows in October, or we have many, many times, which means usually a lot of times September was not great.
I think investors should be cautious for the next 8 weeks. You know, September.
Next 8 weeks, be cautious.
Yes.
You're not always cautious.
That's right. When the market's been up 7 of the 8 months this year, so we know it's an incredibly strong market, but we also have the September cuts and we have the election, things that'll get people nervous. I think in the next 8 weeks, people get a chance to buy. So I think it's good to be cautious, but just ready to buy that dip.
You have, because you're fearless and you'll say anything, you have in the past actually talked about election-related trades and Trump trades. And do you see anything going on now that indicates anything to you? Bitcoin hasn't been acting very well.
Yeah, Bitcoin hasn't acted well. The two things we're watching to sort of look at how election probabilities are weighed is Bitcoin and energy. I think the fact that oil is being weak, even with some geopolitical risks, tells me I think the market is starting to bet more on a Trump election, but
because there'd be more production.
More production.
Bad
yes.
for price, which is not necessarily the way that you might think about things, because we hear about, you know, we're at records for oil production. No one realizes the reason we're at records in this country is because prices were so high that it caused a lot more drilling and activity, and the prices were high because it's harder to drill without and LNG and everything else the Biden administration did.
Yeah, that's right. So people think oil should be higher here for many reasons, but oil's been weak. So I would say that's probably the market.
That's China too, though, isn't it?
Yeah, China's becoming a bit more mysterious, right? There's even risk maybe of negative GDP there.
Okay, so the next, and funny you said 8 weeks. It's almost exactly 8 weeks, I think. What's that? It's like 63 days or so. So some uncertainty and caution going into the election, but in your view, people should get long.
I think they'll get a chance to buy long, yeah. So I think this is one of those where investors need to be cautious, but in the back of their minds know this is a strong market.
How far down? 10%?
I think that 7 to 10 is a possibility. And we've already had 2 7% corrections this year. So it's been testing investors' patience. But I think, we should expect turbulence.
And then the question, of course, is when the turbulence comes, is it a buy the dip always?
I think,
or is there going to be and by the way, buy the dip at when it goes down by 2 or 3%, or you really actually have to wait for a 5, 6, 7% pullback?
I think 1 or 2 is just almost like daily noise. This market has shown, pullbacks like that. So I think something like a 5% pullback is very likely, but I think we do.
And are you waiting for that?
Yeah, I think it. You know what? We'll find out this jobs report, because like if it's too strong and investors worry, and so the stock market's down Friday, I would be buying that dip. But there's a chance that we get a good jobs report and the market's up. I hate to sound so binary, but I think I would just say at the bottom line is it's a strong market. So I don't think this is we've seen the top for 2024. It's just that the next 8 weeks are tougher.
Does any of what you're talking about depend on what I even hate asking about the Fed, but we're looking at the Friday numbers in the context of what the Fed does whether it goes 25 or 50, or everybody's assuming 25 at this point. That's not going to be exciting to anyone, is it? It's almost like a non-event.
That's right. The 2 years telling us there's like 6 cuts in the next 2 years, and I think that still makes sense. I think we need to get back to a neutral rate.
6 25 basis point cuts.
6 25 basis point cuts, yes. And so I think September 25 is still the default in most people's minds. And I mean, I think it would take a bad jobs report to make it 50.
Right. But in terms of risk, and we always go symmetric, asymmetric, it almost sounds like you're more worried about the jobs number being too hot than another growth scare.
Yes, that's right.
That's weird.
Yeah, it's because I think the perception of the soft landing moved to hard landing on the July jobs report because unemployment picked up. Now, if the jobs report's solid, everyone's going to flip back to like, things are too good, the Fed has to actually not cut. And so I think that's what I think is going to be the debate on Friday.
And then, so you buy if we go down 10%. How's next year? What does next year look like to you? Double digit up?
It's there's probably pent-up demand because companies have been cautious for the last 2 years. And if mortgage rates, which are still too high, in the 6s, if it drops to the mid-5s, I think it is a good profit year next year. So I think markets could actually do quite well in 2025.
All right, one more political question. I don't know what would get through in terms of capital gains and unrealized capital gains and corporate tax increases. But just in the last administration, I think a lot of what would be perceived as negative for business initiatives were overcome by the fiscal, just the largesse of the stimulus that we got. Could that happen again? You can do all these horrible things on the supply side, but you spend so much money, it's like Keynesian and it goes up. I mean, what if Kamala Harris were to win? What do you think the market does?
I think markets are still going to be fine just because of the tailwind from demographics. But you're right, at the back of people's minds, I do think eventually markets are going to worry about the deficit. It is hard to imagine this spending like this without having consequences.
Would raising corporate rates help? Would that be perceived as positive for the deficit or negative for corporations?
From purely perspective markets, I think raising taxes on businesses and wealthy would be negative.
Negative. Okay.
Tom,
because you're wealthy. So all you care about is yourself. No, that's what I always hear that from people. I love those Trump tax cuts that raised my taxes 30% because I live in New Jersey. That's all you care about, Sorkin. It's keeping those tax cuts that raised your taxes 30%.
No, we got to figure out a way. There's got to be a way to do it.
I know, but you hear that, don't you? That all I'm worried about is my last tax cut got me a 30% tax hike. So obviously that's not how I'm viewing things. I'm curious about that.
Well, it could go up.
Am I not more curious?
I imagine you do worry about the taxes going up.
For corporations, totally. I'm not thinking
not corporations, individuals.
They already did. I mean, they can't get me any worse.
They could.
All right, I hope you're all having a great day and staying calm in this market. I want to talk about NVIDIA, talk about Tesla, and talk about the broader market as well. So last night, I uploaded a video explaining why I'm bullish on a swing trade setup in Tesla. To be specific, I'm trading shares of a leveraged Tesla ETF. Feel free to check out that video if you want a full explanation of the setup. In that video, I repeatedly said that we need to be aware of what's happening in the rest of the market because I see two market-specific risks in the short term, FOMC and the upcoming election. If the market trades lower, then it will weigh down on Tesla in the short term. It is not unusual for the market to trade lower during September and October, especially so during election years, as more market participants start to worry about the outcome in November. And that is certainly true this time because the two candidates are polar opposites on just about every policy decision. Additionally, we have FOMC on September 18th. As I mentioned in last night's video, the market is already priced in a 25 basis point cut at the September meeting, and now the market will likely start wondering about potential future rate cuts and also start paying more attention to the labor market, as Tom alluded to in the clip you just watched. So as for the Tesla swing trade, I still think the setup is intact, but these are risks that we need to remain aware of. If the rest of the market trades lower throughout September and early October, I still think it is possible to see a pre-anticipatory rally in Tesla at some point in the near future as we get closer to the robotaxi event on October 10th. However, if the market trades lower, then the rally in Tesla will be much less than it otherwise would have been. Today, I've been impressed seeing how well Tesla has been holding up in comparison to the rest of the market. At the time I'm recording this video, the SPY is down roughly 1.5% and the triple Qs are down more than 2%. And even still, at the time of this recording, Tesla is slightly green. Can you imagine how much Tesla would be up today if the rest of the market was not selling off? So overall, I still like the setup on Tesla. I just hope the market can calm down and remain calm long enough for the stock to rally. If the market trades lower, then I think we could still see a rally in Tesla sometime between now and October 10th, but the rally will be substantially less if the rest of the market is trading lower. All right, now let's talk about NVIDIA. In my last few NVIDIA videos, I told you that we were trading underneath the 50-day moving average on the daily time frame, and I thought it was likely that at some point in the near future, NVIDIA would trade lower and retest the support trend line that stretches all the way back to January of this year. And that is exactly what happened today. Now, at the time I'm recording this video, NVIDIA is trading slightly below the trend line, but the trading day is still ongoing. And so I don't know yet if this is a true breakout to the downside or just a fake out. We will have to wait and see. If we get a clear breakout to the downside below this trend line, then I would be looking for NVIDIA to trade lower to retest recent support around $90 per share. Please hear me well right now. I'm not saying this is all going to happen immediately. NVIDIA could very well have a green day tomorrow for all I know. But what I'm saying is that at some point in the coming days, if we have a clear break below the support trend line, then I expect NVIDIA to make its way down toward $90 per share, but it might not happen immediately. It could take a number of days for this to happen. So today I'll be watching to see whether or not we close below this support trend line, and that should give us a better idea of whether this is a true breakdown or just a fake out. And now I want to make one final point looking at the SPY's chart on the daily time frame. Notice that we came very close to making a new all-time high on the SPY, but unfortunately we did not. With this in mind, and given the uncertainty surrounding the next FOMC meeting, the upcoming jobs data, and the election in November, I think it is entirely possible that the market could trade lower before moving higher. I have a lot of respect for Tom Lee, and I would say that most of the time Tom is quite optimistic. So if Tom is bearish or feeling uneasy in the short term, then it is worth paying attention to. I remember back in July, I noticed Tom started feeling uneasy about the market in the short term, and of course the market traded noticeably lower shortly thereafter. So I'm not saying it's guaranteed to happen this time. Sometimes Tom is right, sometimes he's wrong, but more often than not, his analysis ends up being correct. And given the macroeconomic situation, given what I see on the SPY's daily chart, given FOMC and the upcoming election, I think Tom's call for a slight pullback over the next couple months is very reasonable. So those are my current thoughts on Tesla, NVIDIA, and the overall market. I hope you all have a great day. Remember to stay calm in this market and do not make any irrational decisions. With that said, I'm curious to hear your thoughts in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.